Hi there, and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. Let's get straight to business because there's lots to cover. It's a big day for earnings, both globally and locally. But first, amongst announcements that POTUS did, and President Joe Biden put out a tweet, which I will bring it out here. He, of course, reiterates that he's spoken to Prime Minister Modi and pledged America's full support. Remember, this is something that Prime Minister Modi put out in a tweet as well, that he had a fairly fruitful discussion. So you could well say der aaya durust aaye, so to say, because there's a lot of furore over how US has not come to India's aid, so on and so forth. But I think this settles all those nerves. So this should be good news. This should be viewed very, very constructively. Let's wait and watch how this shapes up. On to markets. What US markets did yesterday, they were soft and flattish, and futures, as I see them, are also very, very flattish. So there is no big deviation in what the US markets have did from the previous session. Nor are the futures suggesting that. So the global markets are a bit quiet. Yes, within that, there is a lot of activity. Commodities are rallying hard. There's this wonderful chart on the Bloomberg terminal which shows how the Bloomberg Industrial Metals Sub-Index is back to 2013 highs. This is quite stellar, really. So metals are marching up. But I must tell you that while metals are doing what they are doing, soft commodities are not doing badly either. So lumber prices have surged 50%. Corn, wheat, soybean, all of these have gained about 15, 20, 22%. So commodities by and large seem to be doing really, really well for themselves. So keep the commodity-based plays in mind. What is Asia doing? I would reckon because US is soft, Asia would be doing precious little. So you would probably have a flattish to a marginally red or a marginally green day, hovering between the red and the green. So that's probably the kind of move that you would have. And we should try and pull up the SGX Nifty. And again, that too is fairly flat. So we had a bit of a fanfare yesterday. In today's session, it is a flattish. Remember, there's no reliance on ICICI Bank to give support to the Nifty today. Presumably, they may rally during the course of the day. But yesterday, we had two big positive announcements from ICICI Bank, which is a heavyweight, and Reliance, which is just obviously a heavyweight. And that really helped the index yesterday. Today, we don't quite have that. The Bank Nifty, which was actually holding the Nifty aloft yesterday, in addition to Reliance, maybe ho-hum. So that's the point that you got to keep in mind. Now, let's try and figure out what's the trade. I mean, the key things, right? FOMC meet, of course, concludes tomorrow. And I think until then, you probably believe that that the world markets would stay sideways ahead of the FOMC meet conclusion tomorrow. Now, the trade setup, I mean, if you just look at the trade setup, in yesterday's session, the return to economy opening up trade was quite evident. You had hotel companies, you had some of the restaurant companies, all of those did really, really well. So there was a bit of a move towards that. Banking, naturally a case in point, right? Now, I would reckon that this week, if not today, you would probably see an extension of that. It doesn't just happen for a day. So I think over the course of the next 2-3 sessions or 4 or 5 sessions, you might well have some of these plays being in focus, including banks. And like I said, metals have just been amazing. And I think they will add to the subsequent share price movement as well. So that's the other pocket that you have to watch out for in the session today. So that's the long and short of trade. I repeat what I said yesterday, that the outperformance of some of the smaller names might actually continue in the session as opposed to just pure play Nifty names. And it's a big day for earnings. As I said, on the global front, Microsoft, GE, etc. come out. But locally, for very actively traded Nifty names come out with numbers. Axis will come out post-market hours, of course, so keep that in mind. And all probably Bajaj Finance too could come out post-market hours. So those will be the two big financial names to watch out for. But Maruti would be important, and the commentary for how April is shaping up would be important, as also Britannia. Very, very important to see how they have fared in this whole micro lockdown scenario and their commentary thereof. So 4 important names. And the broader market names are not far behind, really. A clutch of very, very interesting, more broader market non-Nifty names, which are very interesting and important. IEX, they've been on a stellar run, so they could do well. The 2 asset managers would be really interesting to watch out for. Hindustan Zinc, extremely strong show expected out there, so watch out for that one. As also Syngene, with all the fanfare around the kind of work that they are doing. I think Syngene ends a stock that's been reasonably active, so do watch out for all of these in the results. For some of these, maybe the quarter 4 will not be as important as the commentary. But yes, let's wait and watch what happens. Now, to the stocks that will react today, I think the stock of the day squarely and firmly would be JSPL. Um, the stock has had a bit of a rally. Metals, any which ways, are doing well, but they've accepted the binding offer from World One for Jindal Power stake. The deal is valued at 8,000 crores. This is a big trigger, and this has the potential to move the stock a little bit more. It has already done a little bit, but I think there is more traction expected in JSPL today. So to my mind, this is a stock of the day. You could well argue that Castrol amongst earnings would be, and I'll come to that, but JSPL to my mind is the stock of the day. Now to earnings. I'll start off with Tech Mahindra. I thought the performance was weakish, and we're not seeing tech do well. So mind you, there could be a bit of a short covering bounce because we are close to the expiry. But look at this compared to estimates. By the way, this is versus estimates. So keep that in mind. The revenues are came at 9,729 crores. The estimates were 9,831. The net profit was at 1,081. The Bloomberg estimate was 1,307. And EBIT at 1,553. The Bloomberg estimate was 1,546. So on the EBIT front, marginally better. But otherwise, missing out is Tech Mahindra. What is only heartening is one, quite like HCL Tech, the valuation comfort is there for Tech Mahindra. And very, very similar to HCL Tech, they had a fairly decent new deal wins share. The TCE was about $1 billion, which is big for Tech Mahindra, by the way. And they returned to double-digit revenue growth momentum. They were not there, but they are confident of delivering that double-digit revenue growth momentum with at least 15% EBITDA margin. So Q4, a big miss. And therefore, I think the template could well be that the stock will react negatively, but it will probably find some cushion at lower levels because of the valuations and the fact that, yes, it rallied yesterday, but otherwise it's off over the last 5-6 day period. So therefore, that might come to Tech Mahindra's rescue. But I think prima facie, the street would be a bit disappointed with the numbers. No disappointment for HDFC Life, by the way. Good things were expected, and I think to an extent they've delivered. So look at these statistics. You don't quite value life insurance companies purely on the basis of stated profit, because the stated profit doesn't quite do justice to what the actual numbers might be like. So here are some of the key statistics. The gross premium for HDFC Life up 22% YOY. Renewal premium up 15%. APE 36% YOY on Q4 basis. It's very strong. The value of new business was up 52% on a YOY basis. And the VNB margins, of course, by the way, this is the last line is a bit incorrect. What HDFC Life has done is that the value of new business margins have expanded 150 basis points over 2 years. So FY21 new business margins, VNB margins, have moved up to 26.1 versus 24.6 in FY19. So over a 2-year period, they've expanded VNB margins by 150 basis points. The beauty is that while there is a lot of skepticism from multiple brokerages about whether the growth and the VNB margins will sustain or no, HDFC Life is suggesting that both growth as well as VNB margins will remain stable. She asserted in the con call that growth will remain stable and the value of the new business margins will not dip. The VNB margins will not dip in FY22. They are also saying that they are not seeing any major renegotiations with reinsurer companies at the current juncture. You might want to tune in to what HDFC Life has to say today on BloombergQuint. That will give you an idea of what they expect to do in FY22. This one has got a thumbs up from brokerages, so let's see how this does. But remember, it's an expensive life insurance name, so you have to bear that in mind. Castrol, I thought the numbers were good. The revenue numbers up 22% at 1,138 crores, PAT up 30%, so did very well. EBITDA up 32%, EBITDA margins at 29.9% versus 27.5%. So on all counts, they actually did pretty well for themselves. So let's wait and watch. This should be positive for Castrol in the session today. So that is one more set of earnings that I believe that all of us should be keeping an eye out for. So do watch out for this one as well. Some stock delivery data that is pretty important and crucial. So like I was saying, the economy reopening up theme played out. Look at Phoenix Mills. Strong gains, strong delivery percentage. 11 Tree Hotels, 13% gains, 36% delivery percentages. So all of those did really well, and therefore you should be keeping an eye out for some of these in the session today as well. Lastly, Do watch out for Kotak Bank. I don't have a firm view out here, viewers. Anyways, I'm a journalist. I'm not supposed to have firm views on stocks, but be that as it may, I don't really have a firm view on what Kotak Bank could do. But brokerages, so for example, JP Morgan is saying that the rules that have come out yesterday are sentimentally negative for Kotak Bank, even though Mr. Uday Kotak has another 3 years for transition. So that's their view. Um, Kotak Bank, CLS says Kotak Bank will be the most impacted because of the RBI capping of the MD and the CEO terms. So therefore, that's the other brokerage that has come out and said. And Bernstein has said that in their coverage universe, Kotak Bank is affected by the changes. So you might well see a sentiment negative on Kotak Bank in the session today. You might want to go on and read this story that is there on our website as well. But long and short, Kotak Bank could well prove to be the dampener for the Bank Nifty in the session today. So viewers, sideways global markets until the Fed commentary comes out. We have a busy earnings schedule today, therefore do watch out. It could be interesting. The one small thing that I want to add out here, one interesting way to look at Bank Nifty is that if HDFC Bank has credit card issues, Kotak Bank has these MD and CEO capping issues, do ICICI Bank and Axis Bank come out smelling like roses? That's for you to answer. Thanks so much for tuning in today, viewers. Have a safe day. Please mask up and stay at home if you can.